Let me now bring on board Rashesh Shah, Chairman and Chief Executive Officer of Edelweiss Group. Rashesh, morning. Thank you for joining us. Rashesh, no rate cuts from Reserve Bank of India. Do you think markets by and large have now dissected the policy disappointment?
I think our view is that it's from the market point of view, the market was expecting a cut from Reserve Bank of India this time, and the fact that it doesn't come has been a setback for the market and the investors. But I think it does increase the probability of a much stronger cut in the forthcoming policy review, because I think we believe in Edelweiss that the economy is slowing down, inflation is coming down. So I think given that the growth is slowing down and inflation is also trending down, will give RBI room to cut rates. And I think given the fact that everybody was expecting it and it didn't come, in the forthcoming policy review, maybe RBI will do maybe a higher than expected cut.
Rashesh, good morning. So what is the best strategy for investors right now? Should one start buying interest rate sensitive stocks on declines?
I would think so. I think interest rates are going to come down. I think even if there is a liquidity stimulus overseas, it will flow into liquidity in India also. So I think interest rates should come down. I think if you look at all the indications, we are fairly confident. How fast they'll come down will be dependent on RBI. They may not come down as fast as people expect, but I think interest rate will come down. So interest rate sensitive stocks should be good investment, provided they are good companies available at a good price. Investors should go after companies a lot more than sectors, because even within a sector there are good companies and bad companies. So good companies which are not very heavily indebted, because I think even now there are a lot of companies which have interest cost as a big cost for them. So companies which are not heavily indebted, with good management teams, with a track record of governance, are the ones that I think investors should go after, especially the ones which are also very attractively valued. There is a huge list of companies, and I think companies from consumer sector to companies auto as well as in the banking sector, I think quite a few companies are now starting to look good.
So Rashesh, if you are of the view that in next 2 quarters interest rates in the system will come down substantially, is it time now to revisit companies which have good assets but they are sitting on unstructured loans or currently have high debt, names like DLF, GMR, GVK, RCom?
I think the ones which are reducing their debt and have handled the last couple of quarters very well. I think there are quite a few real estate companies which have also strengthened the balance sheet, brought down interest costs, have been selling off assets, and I think at the price at which they are available could be very attractive. So I think it's a combination of I think the strength of the balance sheet, the quality of the management, as well as the price at which they currently are at.
Rashesh, how did you observe the surge on the entire cement pack in the last few days ahead of the CCI order?
I think the good thing that everybody has seen about the cement sector is the companies have been performing well. I think because of consolidation that has happened. And in spite of the slowdown, it is one of the few industries which is not seeing a significant slowdown. Of course, I think the reports that are coming will act as a slight, speed breaker. But on the whole, I think it's a strong industry, and the consolidation that happened in the industry over the last few years has been a major factor for protecting profitability of the industry.
Rashesh, now there is a reason why consumption-dominated stocks are outperforming Indian markets. They have no debt, predictable cash flow, and high return on equity. But given the way how names like Asian Paints, TTK Prestige, and VIP they've come down off late, do you think consumption as a theme, consumption as a business, or consumption as a cluster now needs to be avoided?
See, I think again our view in Edelweiss is that you don't want to go just by themes, because there are various different companies out there. So companies which are going to be affected by exchange rates, companies which are going to be affected by interest rates or high indebtedness are the ones that still should be avoided, because the exchange rate is still under stress. I think the rupee has gone to 56. The effect of that will come in the coming few months. So I think import heavy companies, companies which have a large import component are the ones which will get hurt even in the consumption sector. So I think again it's company to company, company specific rather than theme specific.
Rashesh, so how did you observe the surge coming in for some of these commodity stocks and particularly metals which have rallied over the last few days? What is your call there?
I think currently the call on commodity stocks that everybody has is related to the call on any easing that will happen, because the moment there is any liquidity easing and any monetary easing, I think it will have its own impact on the commodities, because ultimately every time liquidity goes up, commodity prices also go up, because commodities are not just an industrial asset, they also an investable asset. So investments in commodities could go up and it could lead to an increase in price, and I think that is what currently is being factored in. I don't think it is out of expectations of any economic growth or the global GDP will go up. I think it is more a function of the liquidity easing that is expected now in the market.